You know, for literally thousands of years, this one shimmering metal has had this weird power over all of us. But why? Why is gold so valuable? Today, we're gonna dive deep and figure out why it's still considered the king of all assets. So you see the headlines all the time, right? The price of gold is going up, up, up. And the natural thought is, wow, gold is getting more expensive. But what if that's not really the whole story? What if our whole perspective is completely backward?
And this right here, this quote, is the key to this entire explainer. It flips the whole script. The crucial point isn't that gold is changing, it's that the money in our wallets, the dollars, the rupees, those are the things constantly losing their power. Let's call this the great money illusion. The trick is to stop thinking of gold as an investment that grows and start seeing it for what it is, a steady, unchanging mirror. And what's it reflecting back at us? Well, it's the slow, steady decline in the value of the currencies we use every single day.
So, how did gold even get this special status in the first place? Well, it was no accident. Think of it more like a cosmic process of elimination. Out of all the elements in the universe, gold was basically destined for the job. And what's so cool about this is just how logical it all is when you break it down. Out of 118 elements, you can't use gases or liquids, right? Too hard to carry. You can't use reactive metals, like iron, which rusts, or sodium, which literally explodes in water. Obviously, radioactive stuff like uranium is a no-go, and common stuff like sand, worthless, because it's everywhere. So after this huge cosmic filter, what are you left with? Gold. It's stable, it's rare, it's beautiful, and it's non-toxic. It's really the perfect candidate.
And look, this is not some new idea. Humanity basically reached a consensus on gold thousands of years ago. From the very first coins minted in ancient Turkey to being the bedrock of the entire Roman Empire, gold has always been this universal language of value. And the amazing part? You can take a piece of gold anywhere on the planet today, and it's still recognized for its worth. No government stamp of approval needed.
Okay, so we've covered why gold was chosen in the first place. But what actually keeps its value heading up over the long haul? Well, there are 4 fundamental engines driving this, and they are absolutely key to understanding gold's role in our economy today.
All right, first up, and by far the most powerful engine, is inflation.
It really boils down to this fundamental clash between paper money and gold. See, on one hand, governments can, and absolutely do, print paper money with no real limit. And the more they create, the less each individual dollar or rupiah is worth. But on the other hand, you've got gold. You can't print it. The supply is physically finite. It's limited to what we can actually pull out of the Earth's crust. That scarcity, that's its superpower. This is maybe the best way to think about it. The buoy analogy. Just picture gold as a buoy bobbing in a swimming pool. That water represents all the money in circulation. Now, when a government prints more money, what happens? The water level rises. The buoy itself doesn't change. It doesn't get taller. It just gets lifted up higher by the rising water. That is exactly what's happening to the price of gold during inflation. Okay, on to number 2. The second engine is all about the pure physical reality of getting gold out of the ground. I'm talking about the increasing difficulty of mining. I mean, just think about it for a second. All the easy gold, the stuff near the surface, that's long gone. Today, we have to dig incredibly deep, which costs an absolute fortune in fuel, in machinery, in labor. All those costs create a natural price floor. So, if the market price of gold ever falls below the cost to actually mine it, companies just shut down their mines. That shrinks the supply, which in turn forces the price right back up. It's a built-in safety net. All right, engine number 3. This one is less about spreadsheets and economics and way more about human psychology. Its unshakable status as a safe haven asset. This is the key takeaway here. Gold is the ultimate anti-crisis asset. When the world feels like it's spinning out of control, during wars, pandemics, or just major political chaos, people lose faith in paper assets like stocks and cash. They run for safety, and for thousands of years, that safety has meant gold. This flight to safety causes a huge surge in demand, which is why you so often see gold's price soar during the worst of times. And that brings us to our 4th and final engine, and this one isn't about you or me. It's about the biggest, most powerful players in the entire global financial system, the world's central banks. I mean, all you have to do is follow the money. Or, in this case, follow the gold. Major countries like China, Russia, and India are quietly buying up thousands of tons of gold for their national reserves. This is the ultimate proof. When the very institutions that control paper money are themselves choosing to save in gold,
It sends a powerful signal about how much faith they really have in a future that's based only on currency. Okay, now for what I think is maybe the most powerful illustration of everything we've talked about so far. Let's just forget about price for a second, and let's talk about true value, what gold can actually buy. And to do that, we're going to look at the history of a simple men's suit. This, to me, is just mind-blowing. In ancient Rome, 1 ounce of gold could buy you a high-quality toga, a belt, and a nice pair of sandals. Okay, fast forward to 1920s America. That same ounce of gold could get you a premium, custom-tailored men's suit. And today, that very same ounce of gold still buys you a high-quality designer men's suit. The clothes change, but the purchasing power has stayed incredibly constant.
In this slide right here just drives the point home perfectly. Back in the 1920s, that ounce of gold is worth about 20 bucks. If you had saved that $20 bill today, it might buy you a pair of socks, maybe. But if you'd saved that ounce of gold, its purchasing power would be completely intact. It's not that gold makes you rich, it's that it keeps you from becoming poor.
Okay, so it's super important to have a balanced view here. Gold isn't some magic pill, right? And it absolutely comes with its own risks and realities that you have to understand. This is a marathon, not a sprint. You really got to know about 2 main risks. First, short-term volatility. Yeah, the price can fall, or just go nowhere for months at a time, especially when the economy is booming. Gold is a long-term play. And second, remember, it's a passive asset. Gold just sits there. It doesn't pay you dividends like a stock, or give you rental income like a property. Your only gain comes if and when its price goes up.
So that brings us right back to where we started, this idea of a mirror. If gold's value is truly stable, and it's just reflecting the world around it, then what does its rising price really tell us about the long-term health of the money we all rely on, every single day? That's the real question to think about. Thanks for tuning in.